Good morning, folks. Hope everybody's doing well. Hopefully, you can see my screen, hear my voice. Let's see, before we dig in, we'll take a quick look at the economic calendar, as always. Move this mic a little closer to me. There we go. So we got our jobless claims yesterday. They weren't. They were a little worse than expected. So not that that necessarily always has a big impact, but we did have a down day leading into our CPI, which is coming out this morning, and we'll probably see it before the end of prep. So keep an eye out. We have CPI and some more inflation numbers coming out today that will help provide more direction. Now, before we dig into where we could be going, let's look at where we came from. I stripped this chart down to just key levels and trend lines so that we can understand. Let's even go here. There we go. So that we can just at least understand the structure of where we were, what happened yesterday, where we got to. You know, after making these new lows, we started a steady uptrend that sent us up through resistance and got us to this zone that we have been at for weeks. I mean, this was back in May 27th. So we've just been stuck here for weeks, getting tighter and tighter on these zones, coming to a point in this wedge between resistance and where support used to be. And yesterday, for the first time, we started to test that wedge. I'll drop back down to a lower time frame just so we can see that in the morning we pretty much test that wedge. We got up for a little bit. Then we fell back below our key 4108 and 4101. 4108 is where that 4-hour moving average was. So just to give you guys an idea, we'll throw that back on. Come on. Oh, Toss, will you just do what I've asked you to do? Hey, why not 3 of them? All right. Let's go to that 4 hours so we can see what I've been talking about for a while. We got up in this zone. We kept bouncing at this 45, right? And I'll just go ahead and take out the other. No, I'll leave them in actually. We bounce at the 45. We get a little below it. We get back above it. We keep trying to hold it. And yesterday, we started to lose it. And this 4108 at least is where it was when we were losing it and then got back above it. And we had a lot of interaction at that 4108. We even bounced at it on Wednesday instead of getting down to 4101. So I marked that level to have it in view. So now if we step back down to our lower time frame, and I'll even leave the moving averages on because they at least help show that on a 30-minute time frame we couldn't break through them. Couldn't break through them, could not break through them, right? And we lost that 4101 on every bounce that we attempted. That 4108, was resistance. So when we hit it at 1 o'clock, that was the last straw, and we started to break down. One last bounce at trend line, rejection of the 8 or 9, and down through trend line, breaking through key levels all the way to close and stopping at the next key level. So just wanted to give some context into, why did everything break down yesterday? Larger time frame, we lost our support. We could not get above any moving averages on higher time frames. They were resistance. We were held down, and no buyer stepped in to get us through key levels and turn it into support to head higher. Plus, we had some news blips yesterday, like with ECB and whatnot. So overall, just lack of buyers stepping in when they should to get us through what they needed to get higher. So we go lower. And I know, we have been in this range. And there's plenty of days that we have been, holding puts into close and they just kind of fizzle out, right? And we're holding, I think like every day that we dropped, right, we would grab some puts near close, like at a key rejection, and we'd only get so much, and they'd kind of fizzle out, right? We never got the big drop. So we need to recognize when things are getting tighter and tighter, and when we start to lose key levels and cannot stay above them. That's when we should allocate risk, understanding that, this is a numbers game. This is a game of probabilities. There's going to be days where it does nothing into close and fizzles out and stays in the same range. Then there's going to be days where it breaks and you just need to hold on. But even if you miss the initial drop, there were opportunities to get in. And those opportunities are always going to come around big key levels. 4101 used to be low of year. When that broke, 4056 became low of year. So when we break down and start to take out key levels, 4071 was the lows from last week, I believe. If you miss the first leg, at the next key level, you need to be on your toes, watching those puts, because you're going to get a little bounce at that level as buyers try to defend it. And in that instance, I called out in the room, watch the 4040 strike, because we aren't there yet. And this little bounce, they are going to take premium out really hard. In this drop, those 4040s got up to like 350. In this little bounce, they dropped them to $1, where I called them out and where we picked them up. And then you just hold on, because it takes off right on through down to the next key level. Those 4040s went from like $1 to 20. So I know sometimes sitting through all this is painful. But as we were calling out yesterday, the 405 put on SPY, we kept taking it at $1, and it would go to $1.50, $1.50 to $1.50, repeatedly over and over. So we just kept hitting that trade on every high. Those 405s were hitting our burger bottom at $1. So we'd get in, get 50 cents. We'd hit it again, we'd get another 50 cents. We just kept stacking and stacking. And the last time that it hit $1, it never came back. And in fact, I think this pullback was only like, pulled it down to $1.30 from $1.50. But those went from like $1 to $4.50 on SPY. So sometimes we always need to be recognizing when we're in that range, we play that range until the range breaks. You can draw I mean, pretty much the line right here is 4108. And we had support, at that 4080, 4085. So you play the range. You go long and then short, and then long and then short repeatedly until the range breaks. And if you're doing that and you're locking profit and leaving runners, for instance, on those 405s, the low of day was 88 cents. So they only slipped under $1.12, which I should hope everyone in here can live through that kind of drawdown. So that basically, if you'd have picked up those 405s, and here let's just go look at. I think they be right about here. Excuse me. Load it up. So this was our 405 yesterday. That we'd pick up at $1. It'd go to about $1.50, $1.60. We did that repeatedly. This was the last time. So if you do this, let's say you pick up 3 and you sell 2. You've made $100 and you leave a runner. You do it again, made another $100 and you leave a runner. And you can even just keep doing it. It dipped almost to $1 here and then right back up. So there's multiple times here that you can be picking up a whole new trade, locking the bulk of it, and leaving a runner. And then when it does start to take off, you're already in it. That's what we mean when we say play the range, lock profit, and leave runners until that range breaks. So I'll end my spiel pretty much there, but it's always good to recognize how to play these days when we are just range bound and we don't know what's going to happen. We have had other days in the past, since we have been so range bound, where it didn't really do all that much. We were in a tight range here, you get one drop, and then we're in a tight range here. So it was one good move that day, and then you were playing the range, waiting for it to break, right? So that is why we will be calling things out all the time and saying, we're getting in calls, now we're getting in puts, now we're getting in calls. We're playing the waves, and we're leaving some runners behind in case the wedge and the range breaks. Then we're already in. We can cut the loser for minimal loss because we've already been stacking profit, and we ride off the winner into the sunset, right? So that's the end of my spiel, just at least about yesterday. Oh, I guess, no, it's not, because I was going to show when we look at the Beast tool. On ES, at least, we could not get through Burger Bottom. That was the resistance. And that purple line was kind of our support. So we knew what the range was and what to watch for. When we can't get through things and they just continue to be resistance, chances are we're going the opposite direction. And when our support gives out, it can accelerate. I really want to see this over on spies and Qs. Because on SPY and Q, we were in the burger most of the day, fighting around. Qs were a little stronger. We got up out of burger, but we died at that purple line, right back in. And we always try to say, when we're hitting burger bottom, go long. When we're hitting burger top and failing, go short. So the longs worked. They even worked a couple of times. But then, rejection at burger top, we should be loading puts. With just the goal of getting to burger bottom, locking some, and leaving runners. So this opening range zone that the tool gives us is our guide. When we hit the bottom, we should be going long. When we hit the top, we should be going short. And as that keeps happening, we are going to learn where they want to take it. If we get up here and start to fall back in and cannot break out, that is very bearish. Just like if we hold bottom and keep going and hold the open and keep going and hold the top and keep going, that can be very bullish. If we look at it on SPY, very similar. And in fact, let me just get rid of all the squeeze clouds. Just to make it as clean as we can. Come on, come on, come on. On SPY, very clear, right? Burger bottom to top, bottom, rejects top, bottom, rejects top. And on that last bottom bounce, rejects open, and down we go. This right here, just trying to help everybody understand the beast tool and how to read it. This right here should be a huge, big sign. We've been bouncing at bottom all day trying to break through top. We bounce at bottom, can't even get to top. We should be cutting all calls, loading all puts, because there's a breakdown coming. Especially when you add into the context that on ES we were losing that support line. So just some things I wanted to recap and cover to help everybody in here out when it comes to understanding, reading the market and where we are, and understanding and reading the beast tool and how it can help you. So for today, we had a big drop. We are at a key level. We are also not too far from the first Keltner down and a big psychological level of 4,000. So we will see where our, actually it should be here. Probably just have it turned off. There we go. So we're opening at a key level. And, well, in fact, futures opened slightly up yesterday, putting our burger right at the key level that we stopped yesterday, that 40.13. We have that psychological 4,000 and that 39.88, where the first Keltner is. We are coming into the open with a 30-minute squeeze intact that we can use. And that 30-minute squeeze kind of overlapping our burger tops and bottoms. So, like I'm going to keep preaching and try to drill into everyone's head. Play the range till the range breaks. We should not be afraid to go long, because this was a huge energy move down with very little bounces, and we landed right at a key zone. This inflation data that could come out, or that's coming out in 7 minutes. We don't know what it's going to say. It could say that maybe inflation is on the wane. Like maybe we already had our peak and it's coming down. That could turn things very bullish where we just engulf right back up. We do have our moving averages above. I'm going to take off the beast just like we see where it is. Play the range, 413 up to 40.30, 40.40. We could bounce around there before heading lower. And the outer shaded areas down at our next key zone. So if we break this zone and break 4,000, this is the next zone I expect it to go to, and we have our beast down there. But I'm going to take it off just for the rest of prep because it is a lot to look at. And what I want to focus on is we are at a key level between key zones. We have daily liquidity, all of our moving averages right up at those key zones, and POCs above that. So we have a lot of magnets up above, and if we are breaking trend and breaking moving averages, we should expect a little retest to prove that it's time to go back down. So we should not be afraid to play calls today. That's why I say play the range until it breaks. Calls at the bottom of the squeeze and at bottom burger, puts at the top, locking profit as it oscillates, and then we could see a break higher to retest the moving averages. We could see a break lower to get to the next zone. We could just hold 4,000, stay under 40.40, and chop in this range. So we've got a high, we've got a low, we've got a squeeze top and bottom. Play that range until it breaks. Don't be afraid to pick up calls at the bottom. Be ready with your puts. That's why we preach to watch both. So, key level, zones above and below. We know where we can get to if we get out of this range. And Q. And Q, broke down with everything, but all in all, it's not too far from the key level it gave out. That 450 was key. It's trying to hold 300. And just the tiniest pop will get it right back to the level it was holding for a test. It's right underneath the daily 15, and the daily 8 and daily 21 are right there. Above that key zone, and right at that psychological 500. So we could see a little pop, and maybe even come on back. We'll have to see what happens when we get to the moving averages, but they're not too far. If we just keep rejecting the daily 15, and that's all we're going to get, we can roll back over if we lose this 300, right down to the first Keltner and 12,100. This is another big key level that, frankly, on NQ, staying above 12,100 for me is still, in a way, bullish, because it is a key level that is higher than the yearly low. And you can see once we broke through it, after a ton of testing and rejecting, we took off. So let's see if we can move up to test these moving averages, or if we're going to take a trip straight to it, since once we got through it, we have not been back since. This could just be a dump straight to it to see if it holds, and if buyers are still there before we bounce. On the ready at 1900 and daily 50 caught up with each other, and pre-market the ready was already giving it out. In fact, the ready opened way down from the 50 back at the daily 8, and once it gave up the daily 8, the market rolled. So the ready's still holding the daily 15. This could be our first indication if we're going to hold daily 15s and move back up. I forget on ES. I think we took it out on ES. It's way up above. So on the ready, we kind of will have our first indication if we can hold daily 15 and get back up to test the other moving averages, or if we're just going to reject 1850 and fire the squeeze down. So keep an eye on the ready as maybe an early warning. And YM. YM definitely been weak. It was in Q looking the strongest yesterday, and YM kind of kept holding us back. So opening kind of between the daily Keltner, the moving averages, and we've got psychological 32,000 and 32,050 above. Basically, we're going to have to see how this squeeze goes, how the economic data is about to impact us. Play the range till it breaks. but would like to see YM help us out in either direction. Apple. Apple was another great gauge yesterday. 147.5 has been key. Stayed below it, couldn't get through it, couldn't even get to it, just settled at lows. Even VWAP was constantly holding it down, and it just finally gave out, going through the next level and settling at about 142.5 in that daily Keltner, right? And now it's already dumping economic data. So get ready, folks. It could be more downside coming. As Apple in front of us is about to just dump to the next zone. Back in the channel. So yeah, get ready for downside, folks. We take a look back over here. Already gave out our level. Almost down to the next. So, let's see now where that beast tool is. All right, so now ES is going to be opening at our further reaches, our further shaded zone, and near this key level. So, and we'll also be looking at a big gap down. So we'll have to see, as always on SPX, likes to fill gaps. We'll have to see if we get that cover pop to fill the gap, come back. But yeah. Let's move on. AMD. Trying to hold its squeeze bottom for now in this pre-market drop. Stuck between all the moving averages on the daily. So likely going to stay in this range. 97 up to 102. Starts to give out 97 down to the daily Keltner. Amazon. Well, she finally decided to move somewhere. Right down to the daily 15. And we have a daily Keltner right here at 113. So, let's see if she stays in this range. Gives out 113 and heads to 108. And yeah, I'm not too interested on the upside on Amazon right now. Cat. Made it up above our 227 to set highs at 232, but then when she opens back under a key level and resists, down we go. Back at the daily 8 and the first Keltner. If we start to lose this in 22, likely going back to the daily 21 and the daily 50, which are all stacked together. If she can hold, maybe we get a little bit of a relief pop, but things not looking good after that economic data. Google was holding up and looking like she wanted to move, rejected cloud tops and right back to the bottoms. And the daily 21, now she's gapping down and slipping outside of this 4-hour squeeze, I believe. Yeah. So, yeah, I'd say downside targets today is probably just this Keltner and this daily 15. Probably stay in this range unless market's really just going to die. But I doubt we go to ATR in a day, right? We close right at the mean. This would be an ATR, so let's not get too wild. GS. So weak yesterday. And still looking weak. And not far from 300. So we'll likely keep slipping right down to 300 where we've got a daily Keltner. and a big old daily squeeze bottom. JPM, just as weak, rejected the daily mean, already down at first Keltner. Yeah. Ugh, meta. Was only strong for a second and then died yesterday. I mean, just died. I don't even see a bounce in there. Just like open and down, open and down, open, down. There's no bounce. So I guess they really love that ticker change, right, guys? Arriving at a daily squeeze bottom that's very thick. And what looks like a 2-day squeeze as well. So, kind of expecting this death to slow down at these big fat squeeze bottoms. But if market's just going to tank, we'll see. Microsoft. Down to 4-hour bottom yesterday, giving that up. Microsoft and Apple down pretty hard since that economic data came out. Like 5 points on an 8-point ATR. Shit. So some things are going to be opening in a whole ATR down. We need to be careful. Because they could just kind of go sideways while people... There's going to be some profit taking on all of this gap down. So... But Microsoft coming up on the bottom of a daily squeeze. So at the very least, like just looking at where we had low of year, now at the very least we have big fat daily squeeze clouds that have come in. So what that can lead to is if we are going to retest low of year on some names, this cloud can provide the support that if we hadn't have had it loaded, we might not have known it was there. And if we weren't tracking our squeezes on multiple time frames, so that we can arrive back here and hold and hold and hold and accumulate at a higher low for a head higher. But just like any squeeze, we can push against it until it opens and fires down. Just we know when they are nice and thick like this that we will see some bounces. Getting through them will require some pushing against them to get them to open up. So we have a little bit of a safety net here when it comes to revisiting low of year. Netflix. They are killing her again. No interest. Could barely live life above 200. And already almost back down to that second Keltner. Already blew past the first. So, not a huge interest in Netflix. NVIDIA. Trying to hold the daily means yesterday. Now, already down to the first Keltner and catching a bounce. So let's see with all this gap down of an ATR, if we start to see a cover pop, if that dries out, switching to puts, kind of looking like how the day's going to unfold. Yep, just like everything. Arrived at 300, tried to hold, now already down 6 points on a 9-point ATR. Overall, opening near this second Keltner, let's see if it provides resistance on any cover pops, or if we can get through and turn it into support to come back to test 300. But if that Keltner continues to be resistance, that could be where any pops dry out and we start to head back to break pre-market low and head lower. But we should also just be cognizant of ATRs and are we going to make a bigger than normal move today. But it is SPX roll, and it is monthly OPEX, quarterly, next week, so this could just be the beginning of a lot of rolling and selling into those events. Roku popped up on that rumor. Buy the rumor, sell the news, right? I don't even know if they've confirmed it or announced that it's going or not going yet. It could still just be a rumor. Right back to the daily moving averages. If those provide a resistance, could be heading right back down to first Keltner and the squeeze bottoms. Shop. We talked about relative strength in shop this week, and every open has been strong pops. But ultimately, when the market's rolling, even things that are somewhat leading, not calling shop a leader by any means, just recognizing the relative strength that kept appearing every day at open, to where there were great trades on the call side. And she fought all the way from 350, pretty much back to 400. But gave out, coming all the way back. Let's see if she can get back to the daily 15 for a daily 8. Moving averages, a little liquidity pocket. Or if she rejects those and just keeps going. SPX. This is why we talk about gap fills, folks. SPX popped up first to fill the gap, and then it died. Then it came up again to fill the gap, and it died. And it even tried one last time to fill that gap. I mean, gap was filled, right? But filling the gap was continual resistance. So let's see, today we're going to be opening way down. Mark your gap, see if we can start to fill it. And don't be surprised if we run into something like moving averages before we fill the gap, or daily Keltners, and those provide resistance so that we only get a partial gap fill before heading lower. We could also come all the way back and fill the gap and come hit moving averages. Because if they really want to sell into next week, why not rip it up on Friday? Somewhat before they sell it again. SPY. Already tapping our next key level, right? And you can see from this 410, 409 zone, I don't have much on purpose, because in my opinion, these key levels can mean once we give out and resist, it's just a straight path to the next. If this can hold, this was such a straight path, we could see a cover pop to get back to test key zone and the daily moving averages, which are all right near each other. So, premise to the upside and downside. Yeah, already tapped like a full ATR, so be patient and use your beasts when things open. Square could not stay above this key level for very long at all. Yesterday, almost tapped it, death, right through the next, and already arriving at squeeze bottom. So I could actually take a little interest in Square here, especially if the market's going to do a little bit of a cover pop or a test of daily moving averages. Because we know we can see reactions at these squeezes. But, yeah, not a huge interest. Tesla. Poor baby got turned around on her move yesterday. Tesla so strong. 3 days in a row, definitely trying to lead. And each day, the premise has played out perfectly. Held a key level, ran up to the next. 718 from 691. Opens above 718, hold key level, runs up to the next. Taps the 750, comes back, holds key level. gaps way up to 750, takes off a little further, but once it gave up 750, could not get back above. Repeated attempts to try to break through, and down she goes. And key levels, again, provide opportunity. If, and it's all if this then that statements, right? If we can catch a bounce at that 737, we need to get back through 750 to head higher. If we can't get through 750 or the daily 21, we're not going to head higher. We can go back to key levels. But you can use those key levels as a bounce point to pick up a call or a put to continue the move. So when it hits a key level and tries to test the next above, this is where you're able to load puts up to take out some key levels. Tesla landed back at that 718, tried to hold it really nicely after hours in pre-market, and already tearing right down through to our key level again. So from 4 hours squeeze top to 4 hours squeeze bottom. And on a week where everything has been range bound, we should not be surprised to see things tap the bottom of the range. If they're still in range, because a lot of things did fall out. But we shouldn't be surprised to see this tap 4 hour squeeze bottom today, and maybe even catch a bounce back to 700 or 718, which kind of sits in the middle. But we could easily test 4 hour cloud, this 691, and give it out. If so, next key level, 667, and I think I have some down here at 657. Yeah, I do. If I go over here, no, it's default. There you go. So, got some levels around 660, 667 on Tesla. And VIX. So VIX, 25, big key level. Yesterday, breaking of 25 was the beginning of the big old drop. And you can even say, you know, we kept holding this daily Keltner. Like, this is why we track all these things. Daily Keltner at 24.15. Drops out of cloud, holds it back to 24.50. Holds it again, back to 24.50. Gets above 24.50. Drops below, holds it again, back above 24.50. Tiny drop just to secure 24.50. And off we go through 25, straight to 26. I just want to try to highlight how that lined up so well. Let's see, that last hold of 24.50 was at 2 o'clock. We broke 25 at 2:45. And if we look at some of those puts, their last low was right around 2:45, 2:48, and then they took off. At the same time, at that 2:45 that we were breaking through 25, if we look over at ADD, and I'll make this a little bigger so we can see, ADD was holding this 1707 all day until it broke right here at 2:45. So at 2:45, VIX breaks 25 to the upside, ADD breaks key level, it's held all day to the downside. Just showing you how everything can line up together, and that's when you have A+ trades, and that's what you try to look for. So, today on VIX, already up above 27, gapping above its daily moving averages. So wouldn't be surprised if VIX just came back a little to test daily moving averages, giving the market a little bit of a cover pop before continuing higher. It can also just hold 27 and continue higher to 28 to 29 to 30. So everything's making a change in trend. Let's see if we get a little cover to retest everything before heading lower so they can load up everything again before heading lower. And let the beast be the guide today as things open. We can see ES has now completely made it down to this zone. And yeah, next zone down is 38.60, which is a whole 100 points past where we are. Can it happen? Yeah. But I'm expecting a little hold here, a little cover pop, and we might just chill in that zone. Should this start to give out, we can accelerate. 3,900, 38.65. So hopefully this was helpful for everybody today. And frankly, do not kick yourself if you did not catch a piece of this, right? We're going to get more moves like this all the time, to the upside and to the downside. And our job is really just to recognize the trend, to ride with it as it moves around. And as you can see on this chart, you basically get all cycles of the market. We had our drops, accumulation. We had our pops, accumulation. Now we're going to drop. So let's see where we stop. If we can accumulate and head back up. If we get some bounces to cover some of this pop. Or if this down will continue right back to our last spot that we held. Right? So good luck today. We'll see you guys in chat. And as always, thanks for tuning in. We truly appreciate all of you. We appreciate your support. We know we've been testing some new things with this new Beast tool. We're going to try to get control of all of these new changes and tests that we've been doing. My goal is hopefully that the new Beast tool can update every day so that you guys just pull up toss and hit the update button. But we're still trying to get that up and running. That's also why the Beast tool that you guys have been importing each day has not been changing in name. If I change the name before I export it to you guys, it's a whole new tool. And I think the problem is TOS is not establishing a tool that I'm updating every day. So we appreciate you guys bearing with us while we test out all of this new amazing Beast 4 and how to distribute it to you guys more properly. And at the end of the day, there's no more looking up Beast numbers, there's no more entering. It just works like it should on your charts like it does on mine. So appreciate your patience and understanding while we get through this little bit of testing to figure out how Beast will look going forward. Just to give everybody some fair warning, since we have our different tiers, it looks like one of two ways. Beast could either be a tool for every ticker, which in my opinion is not ideal, because I know you guys don't want to go around picking up a number of Beast tools every day for different tickers. But there are other alternatives, and it might be where we condense how many tiers we have and kind of adjust folks around, and maybe certain tiers only have certain tickers. We're still trying to figure that out. I'll be doing some polls in the room to get feel from all of you guys on user experience, what's going to be the best on your side. We're going to work through it together. So I appreciate everybody. Appreciate your patience. Thanks for tuning in. Good luck today. See you in the room.